So I thought we would do a really fun video and I would show you how to fund your IBC policy using privatemoneyclub.com. I mean, a lot of people are doing this, so I figured, what the heck, let me show you a video on using private lending or private money club for that matter to fund your next policy. Let's dive in. So a lot of people will ask me, Chris, how do I open multiple policies? And I always tell them, well, you use the money from your money working for you. Now that doesn't always land. They're like, elaborate, explain. And I give them this example almost every single time. Imagine you had some money sitting in your original policy that you set up for the infinite banking concept. You got that money. Now remember, one of the rules of the infinite banking concept is you have to find an opportunity where your money can earn a higher interest rate than what the insurance company charges you on the loan, or what your private bank charges you to borrow funds. We call that the cost of capital. So let's just assume, hypothetically, that your cost of capital, the loan interest rate on your policy loans, is 5%. We got to find a place where your money can earn a higher interest rate than 5%. So where would that be? Well, a lot of you can think of a lot of places. Well, I could put money in the stock market, yes, but stock market goes up, it goes down, it goes up, it goes down. It's not consistent, so that wouldn't be a good place, but not a terrible idea. How about paying off debts? Yep, that would work. Okay, but what other opportunities are there? And a lot of people are like, I don't know. Give me a hint. What do banks do every single day? Lend. They lend money. And what is a bank's favorite thing to lend on? Real estate. Why? Because real estate is a great collateralizable asset. So banks love to lend on real estate. That's why when you needed a mortgage for your house, you went to the bank and they gave you a mortgage in most cases. They love it because the asset, the house, doesn't move like a car does. It stays where it is, and over a long period of time, real estate values have always gone up. So the bank looks at it as a good asset for their collateral, and also a very safe collateral for the loan. So the bank lends the money out on the real estate, and then you make payments back to the bank. And that's how banks make money. So if you wanted to make money, that would be a good option, right? But up until recently, there wasn't just one place you could go where you could find all the real estate deals that you could look at and do your due diligence on that you could lend money on until now. About 4 years ago, I created a thing called privatemoneyclub.com. And to me, it was just a logical solution to a lot of people's problems. And whose problem was it a solution to? Two different people. People with money, so I found out that people that had money, they all had a common problem. And that was they wanted to make more of it. And then the other side of the coin was people that needed money. And I found out people that need money also have a problem. They need money to make more money. So therefore, I said if people that have money and people that need money both have problems, how do I solve both problems with one solution? Hence, Private Money Club came to be. And Private Money Club is the first of its kind, and it is what I like to call the first and only dating site for money, because money gets to go date on opportunities, and opportunities then pay the owner of the money. That's it. It's like a real game of Monopoly. But let's get into it, because I want to show you a little bit about how can you use Private Money Club to fund your second policy. Okay, let's get in. So now the first thing you'll do is you'll go to this website called privatemoneyclub.com. And you're going to have to create a profile. So when you get in, it's going to ask you some questions. It's very simple. If any of you have a social media site now, it's almost identical. You're going to go in and you're going to create a profile. And when you create the profile, you can put a bunch of photos in, you can tell people a quick bio of yourself, you can go in and tell your entire story in your About section. You can actually put photos in, you can become certified as a lender or borrower. That is a paid option, because Private Money Club doesn't cost anything for you to go on and create a profile and start doing deals or lending on deals. However, if you get serious with it, you're certainly going to want to look at the paid options like the Premier options, which gives you more storage, you can post more deals, you can do more with notifications, and you get to become certified. So most lenders are going to want to become certified because of the knowledge you'll get through the certification course. And most borrowers almost going to have to become certified because most lenders are not going to lend money to a non-certified borrower. But anyway, once you create your profile, which shouldn't take you very long, what you're going to do is you're going to go in and you're going to start creating some friends. So you would do that by going over here to members. And right now, the members, when you go there are going to be no photos that show up. We're trying to prevent scraping. We're bots coming in and trying to steal people's information so they can reach out to them. So what you got to do is you got to start searching for someone. So let's just see, are there any Jordans in here? So if I start typing in Jordan, hey, there they are. Look at that. We got all these different Jordans, and I'm going to go through and I'm going to find ones that look like real people. This guy here, Jordan. I work in tech. My wife works in healthcare. I started in real estate doing hard money loans. Yep, I want to follow him. So I click the little button follow, and that means now I'm following that person. Jordan here, I'm dedicated fix and flip, buy and hold investor. Sure. Look at this couple here, Jordan and Shellen, I believe it is. Yeah, let's friend them. So anyway, you would go in and make friends with a bunch of people. This is my buddy Kevin Jordan here. So you can see there's a bunch. Now the people I'm not going to friend are the people without photos. I don't want a faceless profile. I don't want to be friends with any of them. So we're going to skip that. But that's what you would do. You'd start doing that. But then don't stop there. You're going to want to go into the community and you're going to want to start posting in the communities. Now the groups, there's groups and there's the general community. So you can just go in and you can create a post and you can put a title, you can put content, you can even add up to 4 photos, you can add documents, whatever you want, you can add in here in the community section. But then you just go in and you just start looking at what other people are posting. This person said, new Texas pad split, baby was born. Not quite sure what that means, but if I wanted to know, I would just read it. But you can see there's tons of posts in here. People put deals up. Anyway, I'm going too far. I told you I was going to show you how to fund your second IBC policy using Private Money Club. So we're going to go to the deals section. So here we go. We got a bunch of deals. Now let's scroll through and find a deal that fits your fancy, because I'm going to assume that anyone watching this video is going to be a lender, okay? Now if you're a borrower, this still works, but let's just focus on all you lenders, people with money that want to make more. We got to find a deal that makes sense for us. Now we can search and we can filter all these deals however you want. Like I can come in here and I can say, all right, I only want to look at deals that are 50 to 100,000, deals that have 10 to 20% interest, and deals that are, I don't know, let's just say 6 to 12 months. So I can apply that filter, and some of those filters and some of those notifications are only available to Premier members. But that pulls me up a couple deals. Here we go. We got one for 15% plus 3 points, a $75,000 construction loan, second position, which I don't want to do any second position, and a 4-unit that's needing 70,000 bucks. They're willing to pay 15%. Let's look at that one. So we'll come in here and we'll look at this deal. Let's see. Hold term. They want a loan for 8 months of 70 grand, 15%. Looks like we're doing pretty good. 25 minimum. So here we go. We got all the specifics. This is the deal we want to lend on. Now, I'm not making a recommendation. I don't know this deal. I haven't done any research on this. I'm just doing this as an example. But let's just say this deal checked all the boxes for you as a lender, and you were going to lend to this person for this deal. 70,000 bucks. And they're going to pay you 15% interest. So let's do the math on this particular deal, assuming this was the deal that checked all your boxes. It's 70,000 at 15%. So how much does that mean your money would earn? Well, 70,000 times 15% is $10,500 per year is what you'd make. And they're going to pay that for 8 months. So let's just divide it by 12 because there's 12 months in the year. That means you're making $875 every single month. But hold on a second. That's not what you're actually taking home, because you got to pay that interest on the loan you took from your policy. Now remember, we could do this 2 ways. We could chop the circle in half, and we could just assume that the interest and dividends that the policy is earning is more than what it costs to borrow. Okay, you could do the spread there. I like doing it on this side. 15% is what we're making on our 70 grand. 5% is hypothetically what it costs, and the loan interest rates on the policies vary and they change. But right now, my policy pays me or charges me 5%. So I'm just using that number. Your results might be different. So 15 minus 5 is 10. So I'm making a net of 10%. So if we do the math on that, 70,000 times 10%, that's $7,000 a year net. Okay, now divide that by 12, that's $583 a month that I am free and clear. That's how much money I'm making. So we got a decision. We could take that $583 and we could put it back into the policy as a loan repayment, which is usually what you would do. However, you're not going to be able to get all that money back into the policy, because once the deal pays off in 8 months or whenever this borrower pays you back, you're not going to, if you put all $583 back in the policy, you're not going to be able to put that full money back in. You're not going to fit the 70 grand back in there because you already were paying $583. So what you could do is you could take some or all of that $583 and you could fund a second policy. Now, a couple things to consider with doing that. That's a great idea, but remember, this is an 8-month deal. So in 8 months, there's a good chance that this particular borrower is going to finish this deal, pay you back your 70 grand, you make your first policy that you borrowed the money from whole. So now that policy has all 70 grand back. The loan interest was paid on that policy because we already factored that out, and now we're funding a second policy. But now the funding source for that second policy just ended because you got your money back. So now what you'd have to do is go back on Private Money Club, find another deal that matches this first deal, which is not hard to find. There's so many deals on privatemoneyclub.com that you should not have a problem. But I'm just saying, this is something to consider. When the deal funds and pays back, you're going to have to find the next deal to fund the second policy. So assuming you just kept doing this over and over, that $583 is the amount that you could fund your second policy with. A couple other things to factor. The loan interest charged by the insurance companies, that can change. So you might be at 5 today, but it might go up to 5.2 next year. It might go to 5.5 after that, or it might go down to 4.8. Build that into your calculation because these numbers do change. So just make sure that the spread you're making is ample enough to cover the loan interest to the insurance company and the amount that you decided to fund that second policy with. Now, I do this all the time. And here's how this came about for me. When I first started figuring out how to open multiple policies, how it happened is not because I watched a video like you're watching. It was because I found something out that I was not originally aware of. Now, what was that? Well, remember, the original loan we made here was for $70,000 at 15%. So if I borrow 70 grand from my policy and I fund this deal and this deal pays back, how much money can I put back into the policy as a loan repayment? $70,000. Now, on top of the $70,000 that we borrowed, we can only put $70,000 back. The only other factor we need to account for is the loan interest, which I used an example, a hypothetical example of a 5% policy loan interest rate. So assuming those things, if you were making 15% and then the deal paid back, you wouldn't be able to put all the money back into the policy. You would neck the policy. So how I found this is I was doing this and I was literally setting it up. I would make a loan, I'd lend the money out. I'd take all of the interest that the borrower was paying me and I would set up a loan repayment. I would complete the circle. I always complete the circle. And that money was going back into my policy. Now, when that deal pays off, I now can no longer put all of the $70,000 back in the policy as a loan repayment because I've been paying the loan back every month with the interest paid from the borrower. So therefore, when the deal pays back, I don't owe the insurance company $70,000. I owe $70,000 minus the loan repayments I've been making. So therefore, sitting in my bank account, I saw that there was extra money every single month hitting that, the spread. So what I did is I then said, hey, since this money's pretty consistent and I'm getting this money almost every single month, I'm not going to let this money build up in a bank account. I'm going to find a way to get this money back into another policy to increase my banking system. I wanted to increase the capitalization amount I could fund my policies with. So how did I do that? Branch office number 2. But who was funding branch office number 2 in an example like this? It wasn't me. It was the borrowers. It was my money working for me that was funding the second policy. Now, I'm way past second policies. I'm on third, fourth, fifth, sixth, seventh. I'm in the teens now for the number of policies. But I've done lots of loans. And as you do more loans, the complexity gets bigger and bigger for the lender. You're going to have more bookkeeping, more tracking. So you need to come up with a system that works for you. Now, in the future, Private Money Club is going to offer a dashboard for lenders and borrowers to track this, but as of today, that is not an option. So you're going to need to use spreadsheets or keep good notes of every payment that comes back and every loan you have out there, because the best thing you could do for building your own private banking system is to capitalize multiple branch offices or multiple policies, because the more policies you have, the more capital you will have in the future to lend, which means the more money you have working for you and the more interest you make. That's why when you go to a traditional bank, you never find a traditional bank that just has one branch. There's always multiple branches, and that's for the same reason that you will not just have one policy, you will have multiple policies, because you will expand your banking system. And I just showed you one of the ways you can do that using privatemoneyclub.com. Now, with all that being said, folks, there's one thing I want to ask you to do. I want to ask you to hit the subscribe button right there, okay? And while you hit the subscribe button, right above the subscribe button is another little thing. It looks like a bell. Kind of looks like that, but not a punching bag. I want you to smash that punching bag. I want you to do a left hook, just like that. And then once you do that, it feels good, doesn't it? Send a memo or a message over there to Mike Tyson and let him know that that's what he forgot to do in his last fight. He forgot to follow through with the left hook, but hey, it's okay. At least he made $20 million. But you're not gonna make $20 million by clicking that little bell, but you will be notified every time I put new content out, which will allow you to continually expand your knowledge, which will expand your net worth. Thanks for joining me. If you really love this video, check this one out right here, Private Money, and you'll learn a little bit more about being a lender and a borrower. See you on the next one.